Uncle Jim here. Did you know that selling options is one of the greatest ways to make passive income and that you can also sell options within retirement accounts? I'm currently selling options in my SEP account, my IRA account, and my Roth account. I want to talk a little bit about that today, the guidelines you need to keep in mind if you're working with retirement accounts. I'm also going to share some trades at the end of the video, so stay tuned. I think you're really going to enjoy what I have for you. Before I jump into the key points of this video, I do want to do a quick market update. As you guys know, the market was up quite a bit yesterday, but it was down most of the earlier in the week. I believe today is kind of mixed, and I expect that to continue. I think we're going to have topsy-turvy, some days up, some days down. I had mentioned in previous videos, and I believe to my community, that May is typically not a good month in the market, so I think that's going to continue. I do believe that the Fed will hold steady. I don't think they're going to increase in June. I also think they may hold steady in July, so potentially in August they may even decrease or hold steady again in August. I think they've raised the rate so much now that they need to let the market kind of catch up, or the economy catch up. There's a lot of people hurting out there. These high interest rates are having a big impact. If you have a HELOC like I do, I mean, I'm paying over 8% now on that HELOC, where I was paying, I believe, 3.5% not too long ago, less than a year ago. So I do think they will probably hold steady for a while. I do expect potentially not another increase, probably a decrease in the fall or early winter, so maybe late fall, early winter. They may actually start decreasing the rates, and at that point we may get back into a bear market. Now, I do believe that inflation is coming down. I've seen some prices in the grocery store a little bit easier to deal with compared to just a couple months ago, and I believe that's going to continue. I do think the banking industry is getting stronger. I do think that commercial real estate is an issue. I heard today that several buildings were sold for really cheap. I mean, big commercial buildings. I believe one was in San Francisco, another one in New York, one in Texas, for significant discounts. And I believe that may be the last shoe to fall is commercial real estate. I think there may be some great deals out there for people who are looking for office space or commercial real estate. So I typically like to start off with just kind of sharing that. But let's jump into the key points now. I've been on a journey for the last couple of years. I've been trading options for many, many years, and only doing covered calls when I first started out. And I didn't do anything in my retirement accounts. It isn't until about a year ago that I realized I can also sell options in my retirement accounts. I probably should have realized that sooner. And about a year ago, I started selling covered calls as well as selling cash secured puts and vertical put credit spreads in those retirement accounts. Not doing a whole lot of trades, a little bit, but I did get hit tax wise because I was doing most of my trades in my brokerage back in 21, and everyone knows the market did so well in 21, and I got hit pretty hard tax wise. So at that point, when I realized what my taxes were, I decided to do a lot more trading in my retirement accounts and less trading in my brokerages. And because of that, I probably have taken more risk than I need to in my retirement accounts. But the key point is that you can actually do this. You can sell options, puts and calls in IRAs and Roth accounts and SEP accounts. If you don't know what a SEP account, it's just simple employer retirement account, I believe is what it's called. And that's what I set up with my S Corp that I do my consulting work with. So I was surprised that you can do it in all those kinds of accounts. Now, you can't do it in 401ks, but one thing I have been doing is I do have a 401k from when I worked at AT&T, and I've been moving money out of it into my IRA so I could sell options and do a little bit better. Now, there are some limitations and some issues with selling options in retirement accounts. First of all, it is hard to fund or to put more money in. So if you get yourself in trouble, you can't easily move money from a bank, maybe your regular banking account, or from another brokerage. Sometimes I move money. I have two different brokerages, and I move money between the two. And so if I've gotten low in cash in one, then I'll move cash from my other brokerage to that one, and vice versa. You can't do that so easily in retirement accounts. So you have to be a little bit more due diligence and probably not sell quite as many puts, because when if something does get assigned, and I had some Schwab get assigned, and it pretty much wiped away a good portion of my cash. But I had a lot of cash. I had over 40,000 in that account. But even because of that, I was selling other puts, other cash secured puts and vertical put credit spreads, that I actually was in the negative money wise, and they wouldn't let me trade until I rearranged things, which was okay, because I did have to do some rearranging. But it was kind of a wake up call that there are definitely limitations with retirement accounts, and you have to be a little bit more due diligent to manage your cash. Now, it is less risk in my mind in the sense of taxes, since everything is tax deferred. It doesn't hit your taxes like a regular brokerage account does, or your regular, tax-based brokerage account, which hits you as capital gains, short-term or long-term. Of course, if it's short-term, it hits your regular income. And if it's long-term, like you're doing leaps, well, then it would be at long-term capital gains. So the fact that you can actually do it without being impacted tax-wise is really a huge benefit to actually selling options in retirement accounts. And I found at Schwab that I really have no limitations. I can do it with, I can sell it on stocks, index funds, pretty much the same as I can in a regular individual account or a regular brokerage account. Again, you have to keep in mind too that with these retirement accounts, you are limited with putting money in. You have contribution limitations, as well as pulling money out. If you have to pull money out for some reason, there's big penalties. So that's something else to keep in mind. Now, I'm 57 and a half, and you can start pulling money out of your retirement accounts when you're 59 and a half. So I have 2 years, so it really makes sense for me to build up more cash and potentially use the money from these retirement accounts to live off of and defer when I take Social Security. So instead of taking Social Security at 62 or 65 or 67, I probably will take it at 67, but I may push it back to even past 67, maybe even to I believe the oldest I can do it is 70. But it's another benefit that you have. It gives you the ability to actually plan for retirement. And the way I'm planning for retirement again is to live off some of my accounts and defer the Social Security till a little bit, probably at least 67, maybe as old as 70. So I'll get a much more on a monthly basis with my Social Security. So the big key points again with selling options in retirement accounts is to understand where you are cash wise, how much margin you have left, and don't put yourself in a bad way if the market does a major dive. You never know when we're going to have a black swan event like we did with the banks, or back in with the COVID dive, when we got the big bear market because of COVID, or back in 2008. You just never know when it's going to hit, and suddenly, if we do have a real negative event and the market goes down 20 or 30%, all your position could potentially be in the money and could get assigned, or you might take big losses. The other important point I do want to make is, for me with my retirement accounts, if I sell any IWM, and I am selling IWM in them, I will take a loss before I will let those get assigned. So currently they're way out of the money. I believe the Russell 2000 index IWM, I believe it's right around 76, 77. I think most of my strikes are like 162, 163. I believe I do have a 168, but pretty far outside the money, and most of them are profitable. So those are the key points, and the fact again, it's made a big difference with me with how the returns I can earn on these retirement accounts. And my retirement accounts are kind of all over the place size wise. I have one that's like 55,000, another one that's 85,000. So the fact that I can actually earn higher returns by selling these options, and just like I mentioned in previous videos, I'm typically doing between 1% and 1.5% on a monthly basis. So, instead of a 7, 8, 9% return, I can get upwards of 12 to 15, and sometimes even better. Now, it's a little bit harder during a bear market, but when the market does turn around and we get back into a bull market, I think it will. I'll be able to get back to those kind of returns. It's a little bit hard to get that kind of a return when the market's down, 3, 4, 5% in one particular month or within a couple of months. So those are the key points, and that's what I wanted to share. I'll share more when I go over my trades this week, because two of them were actually in retirement accounts, and I can share with you why I rolled them, what I was thinking when I did it, and give a little bit more detail about this. So stay tuned. Let's jump into the next part of the video. Okay, I've opened my weekly planning worksheet. This is what I share with my membership, typically Sunday afternoon or evening. And I'm not going to go into a lot of detail with this. At the top of the spreadsheet, I typically share my favorites, and to me, my favorites are the stock picks that I'm looking at for the particular week. Aren't necessarily the ones I am going to make trades on, but it's stocks that I particularly like because of, one, they may be close to their 52-week low. Another point is they may be, or almost all the companies I like to invest in typically have no debt or low debt. Also are well-run companies, and typically, they've been kind of beaten down lately. So all these companies, these four at the top, are my favorites for the week. I have CVS, and CVS has been beaten down. It's paying a good premium, and it's near its 52-week low. Same thing with IBM. I think IBM is right at its 52-week low. It may be within $1 or $2 of it, but again, it pays a really good dividend, I believe over 5%, and it's relatively inexpensive. So, and you can typically find lots and lots of strikes. And then QCOM or Qualcomm, it's also been hit really hard. It's another company I really like, and again, it does well. It doesn't have crazy debt. It's well managed. And then Williams Sonoma, and this is a company I talk about a lot, and it's pretty near its 52-week low, which it's really hard to pick it up at that price range. Again, because it's a really good company, has no debt, pays a good dividend, increases that dividend quite a bit. Really good company to look at. So I share usually 4 each week, and I release this again to my memberships. If you want to learn about my memberships, they'll be below with more detail. And as always, please subscribe, hit that like button, and add a comment. Let me know what I'm doing wrong or right, or ask any questions. I typically try to answer all my comments, and usually pretty quickly, usually within 24 hours, if not a couple hours. I really like to communicate with people. So this week I did 4 trades. I haven't done any today. I've been too busy. I've got some other work that's actually due later this month, or actually the very beginning of June. So those deadlines have kept me really busy. So I didn't even have a chance to look at the market today. I do know it's mixed, and I believe it was up at one point. So the stocks that I traded this week, the first one is Schwab, and I really wanted to talk about Schwab because it was in my brokerage account, and it's the one that, not my brokerage, it's in my retirement account, and currently I rolled it. So it was a vertical put credit spread. This is one I did after Schwab was hit hard because of the banking sector, and I did it for 55.45. Now Schwab is right around 51, 52. But I realized I did not have enough cash in that brokerage account, and I'll show you the brokerage account here in a second. But it was 55.45, and I did 2 contracts. I probably should have done 1 contract, but I did 2. So if they were assigned to me, you're talking $11,000. I currently only have $7,000. So if it's assigned to me, and it could still be assigned to me, I would probably have to sell 100 of those shares and keep 100, and then sell both the puts that I purchased. but I found yesterday it had some good premium, so I did roll it yesterday. I rolled it out to July 21st, and again, since it's pretty close to 52, the likelihood of it being assigned is pretty slim in my mind. Typically, the only stocks that have been assigned to me early with my puts have been ones that have been deep in the money. So typically something $2 to $3 in the money has not been assigned to me early. In most cases, I may have had one situation, I believe Corning, that might have happened, but Corning's half the price of Schwab, and I believe it was also $2 or $3 in the money. But again, another good company, so I wasn't too happy or wasn't upset that it was assigned to me. But it was in my regular individual account where I could move cash around. And in this brokerage, or not brokerage, I keep saying brokerage, in my retirement account, I don't. It's not easy to move funds around. I wish I could move, some money out of one of my other retirement accounts into this one, but you can't do that. That's definitely one limitation. So I rolled it out. I kept it at the same strikes. I rolled it from May 19th, again expiring tomorrow, to 7/21 at the same strikes. Brought in 90, almost $100 more, which is pretty close to a 28% yearly return. So in this instance, again, I made a mistake. I probably should have only done one contract versus two, but I've gotten so used to doing two. So again, the worst case scenario, if it does get assigned to me early, I would probably have to sell 100 of the shares and then sell those two puts in order to cover that. And I'll show you what I mean. Let me jump over here to my brokerage. And you can see here it is Schwab in my brokerage, and you can see it's two contracts. And in order, if that got assigned at 55, it would require 11,000. Now, if you look down below, for the cash, I've got just $7,000. Now, I could sell some of this mutual fund in order to get to the 11,000, or I could even sell. I've got 17 shares of IJR. I really like IJR. It's another ETF that I want to keep. So, but if I had to, I could sell some of it. I could also sell some of the SDY, but that's not my preference. What I should have done is only one contract versus two in this retirement account. Just another comment related to, since we're in the Schwab interface, they have made some improvements. They made it easier to roll. You can actually right click and say roll, and it brings up a dialog box that makes it much easier to roll compared to what I had to do in the past. Now it loads everything for me, and I can pick and choose. It's again something coming from TD Ameritrade, and I think they're going to continue to bring more and more into their environment that's currently available in TD Ameritrade. So improving their interface. But I've been very happy with their interface. They do a nice job. So here you can see a lot of these I've done quite well with. Lumen is the exception. I bought 100 shares in this account thinking, wow, what a great deal, but it continued to go down. So, so that's why I was sharing with you. In order to deal with this 7,000 in this retirement account, I've got to deal with the specific funds in that account, and I've got to sell things to cover if I want to keep the 200 shares. But again, 200 shares at 11,000 on a $54,000 account is too much of Schwab. I probably would prefer only to have 100 in this account and maybe 100 in another account. So I didn't think this through clearly, but my hope is by middle of July, Schwab will be back up to above 55, so it may not be a point to even have to worry about. At least that's one of my hopes. It may not come to that. So let's jump back into the spreadsheet. So I also did Intel. I did a covered call and was able to roll Intel that was expiring on 9, I believe it was 6/16. I forgot to put the 6/16. So let's actually add that. But it was expiring on 6/16, and I rolled it out to 9/15, and I brought in another $246 which gave me a yearly return on investment of 4.3%. And that's just literally using the premium divided by the margin required by the number of days till expiration. So that's how I came up with the 4.3%. And my goal really for covered calls is to double the dividend, or do better than the dividend. So if you're getting a 3% dividend, try to get 6% or above the, somewhere between the 3 and 6%. Now, Intel lowered their dividend recently, so 4.3% I think is more than double their dividend. So, and if you're selling options within your retirement accounts, covered calls, or if you just want to just do covered calls, that's perfectly fine too, and you can do really well just doing covered calls. So that was Intel. I did another roll of Truist. This, I believe, was in my regular brokerage, and this is just, I believe Truist is now up above 28, maybe 29, and I rolled it from 616 out to 915 and brought in $164. So when I saw that it had pretty good premium, I decided to go ahead and roll it some more. So since it's a vertical put credit spread based on, the 25 strike for the put I sold and the 1750 put that I purchased, the required margin was 2,000. So actually, this is wrong. It should have been, I put too much in there. So it should be, the return would be a little bit higher, because this would be, 750, 1,500 minus the 164. So we can move this over here. Yeah, so this should be 1,500. So it's probably going to be a little bit of a higher return. Yeah, 36.9% yearly return because of the number of days left. And you can see up here 122 days till expiration. And that's not even considering that it, originally it was 616. I'm basing it on today and the number of days from today, not the difference between 616 and 915. I wondered if maybe I should do it that way. So, and Intel or Truist has been, at the price that it is currently, it's in my mind way oversold. It's kind of a no-brainer, a trade that in my mind is a no-brainer, and it's worked out pretty well. I'm trading in two different brokerage accounts, and I believe now both are way outside the money. Again, I believe that Truist is 28 or 29, which is still a really good price for Truist. It's almost a 7.5% dividend, which is crazy, and they have plenty of cash to pay that dividend. So next is IJH. This is, I believe, was also in one of my retirement accounts, and yeah, I believe it was just in the one we were looking at now, IJR. So I believe it's in one of my other retirement accounts. And this is a kind of a unique situation. That's why I wanted to share it. So I actually, because of the market correcting recently, it's currently right around 245. So this particular covered call became way outside the money and very, very profitable. I believe over 90% profitable. So I actually lowered it. I did go out to November, and I lowered the strike price from 275 to 270, but I brought in $352. This is my cost basis when I originally purchased IJH, because I've owned it a long time, and based on the cost basis and how much I brought in and how many days left till expiration, it's over a 5.5%, which it pays around a 2% dividend. So that's really good. So the point I wanted to make to people is sometimes you can find value in just moving things around. If the price has gone down so much, you might be able to just leave it at the same expiration and lower the strike. And I believe even at 270, it's still like a 20 delta, so it's still at that level I like to have. Now the last one is IBM. I haven't done anything with IBM. I put this out there yesterday, I believe. So I'm keeping an eye on IBM. If it was down today and it looked like I could earn some pretty good premium, but not quite high enough. So it's just something I'm keeping an eye on. But for the week, I'm at 974, close to my goal of 1,000 a week. I probably will do one more trade either today or tomorrow. Um, it all depends on the time and how much time I have to trade. So that's it. That's what I wanted to share. I wanted to share you can sell options in retirement accounts, and you can do quite well with it. But you do have to be careful, with the limitations of funding and different things you can and can't do. Your hands are a little bit more tied with retirement accounts than regular brokerage accounts. So hope you enjoyed that. As always, leave me some comments and have a wonderful day.